Hello guys, welcome to my channel again. Um, in this video, we'll be looking at some pairs and we'll be doing top-down analysis on them. This will enable us to understand what the market is going to do in the coming weeks. And without wasting time, let's dive into it. The first pair we'll deal with is Euro USD. We have some other pair on the list, but if time permits, we'll try to touch everything so that people will have diverse view across the pairs that we are analyzing. So let's dive into it. So this is Euro USD. The analysis we start from monthly time frame. You can see this monthly time frame, and looking at this pair alone, you can see that we are systematically bearish for a very long time. So there is no need to, in monthly time frame, we are not supposed to be confused on what the market is actually doing. So if you just want to take it simple, this is the last obvious structure that the market created, which we can mark this as a break of structure in monthly time frame. So, and after we were able to identify our monthly break of structure, then where is our monthly high that must be protected? You can see this is the high that must be protected because this is the last swing high that the market did. So this is very simple. You can see what the market is doing here. It's obvious that market is actually responding to something. So but before we get there, we have to identify where is our inducement. And as I explained, the inducement is going to be from this leg. So, and as you can see, I was able to, this is the last pullback that the market did in this level, last valid pullback that the market did. So, and this will serve as our monthly inducement for us. So now, where is the response, the POI, that the level that the market is likely to react from? You can see we only had, I said we only have two valid POI. The rest is low probability POI. And according to this chart, I'm only seeing one POI, and this is it. This is the only POI I'm able to spot in monthly time frame. Why? Because this POI also is also accompanied with fair value gap. So if you don't know how I pick my POIs, you can watch my previous video. So this is the valid POI. There is no other POI at the top. You can see this is the first POI, but it's already mitigated and there is no other POI. So, and I remember I said inducement first, then before you start thinking about POI. You can see some people take this level as a what? As a POI, and they were trying to sell. You can see market responded to it, but all market did was to just grab both downside liquidity and upside liquidity, give small direction to the downside, the market push up. So this SMT is not a right place to buy or to sell. So you have to understand that, and it serves as inducement for us. So, and as you can see, market is respecting this our extreme POI. So after that, if this POI is going to push the market to the downside, then it's likely to come down to come and break the structure for us. So, and this is not just going to take few days or months. This is likely to take a whole year. So if this level is going to hold, we are likely to see Euro USD selling throughout this year. Like the way it happens here, Euro USD was busy selling for a very long time here. So as you can see, since 2021, Euro USD sold to 2022. So it's seriously, it can happen. So all you need to do is to just understand the direction that the market is going and you try to trade towards that direction. So that's the concept. So this is higher time frame, and then um if we are to go down to the lower time frame, and let's see, after from monthly we are to go down to daily, 24 hours. So once we go down to daily, we will see how that place is reacting, the higher time frame, this level. And in daily, what do we want to see that will confirm that this level is likely going to hold? Is because is that in daily we need to see the market giving us change of character, a bearish sign, a bearish signal. So all we need to do is, remember, market has mitigated the monthly higher time frame. All we need to do in daily is to now mark our movement, because remember, in daily is going to be a very bullish momentum towards to the monthly POI. Sorry, hold on. So towards to the monthly POI, and you can see that in daily we are actually responding, but you are not just going to look at it based on the look. You are going to look at it based on what the market is actually telling us, the structure and so on. So that's what we are going to look at here. So you can see that the last obvious break of structure that we can reckon with is this one. We can reckon with this level. We can reckon with that level. That level serves as a break of structure for us. So we can reckon with that as daily break of structure. And where is our low? This level will serve as our low, daily daily change of character. Why? Because if you look at it before this structure happened, you can see that this was the obvious break of structure that the market did. And market systematically came down to this fair value and order block and responded. And market used this level as our inducement, remember. So, and market did what? Mitigate this extreme POI, and market buy again to this level. So I think I did an analysis when market was here. So, and I also did an analysis when market was there, that I knew that market is going to get this high. So, and you can see that's why we had this level as our low. So prior to, before market change character, this is going to serve as our inducement, but because we understand that the market has mitigated higher time frame POI, we have to be trading carefully, because higher time frame POI is going to respond. You can see there is every sell off from this. Immediately market mitigates this higher time frame POI. You see market was busy selling. So, and in this case now we had change of character because market has changed this daily time frame character. So what are we supposed to do? Now higher time frame is telling us sell because market is responding to monthly POI, and daily time frame is also changing character for us. So everything is syncing. So from this moment on now, all I will be doing is to start looking for sell on GDP, on Euro USD. So all I will be doing is to start looking for sell. So nothing else. So until the market do otherwise, as long as daily time frame is intact, all I will need to do is this. Look, going forward, this is what I will be expecting. I'll be expecting market to come back to take this, which serve as our inducement. Then this is our decisional POI on daily time frame. Then let's see if we have another POI. There is no. This is the last first POI at the extreme. You can see that it has been mitigated. Another one. Let's see if we have another one. There is no. This is the only POI that is available. You can see why this POI is accompanied with imbalance. You can see this imbalance might attract the market, and market will mitigate this level. Then we can start selling from that level. So when market gets to this level, that's when I will start looking for when market gets to this level, that's when I will start looking for what? Looking for sell, probably in 1 hour or go to 4 hours to start looking for sell. So, but at this point, there is no need to go below this level because we are not going to have anything to actually analyze if we scale down. Now that we know what the market is doing, and the scenario that is likely to play out is having this situation whereby market will drop. So once market drop, this is not break of structure. It means that market creates another liquidity, and this imbalance is still valid. Market can still come there. So, but whichever way the market do, all we need to do is to just follow the plan and stick to the plan by doing exactly what we say we are going to do. So that's it for Euro USD. I don't need to go down. If you scale down, you can see how market is probably responding to lower time frame. But based on how I trade, I don't need to go down. So all I can do before now is maybe when market is coming down, I can scale down and trade to this level. But now that we have change of character, there's no point. I just have to wait for market to do its thing in daily time frame before I can scale down to lower time frame and take action. I only scale to lower time frame when market is trending around my higher time frame POI. Every other thing is a noise. I don't need to do that. So that's it for Euro USD. So let's go to GBP USD and see what we have there. GBP USD. Let me use IC markets. So GBP USD and see what we have there. I think I have another broke. Let me just clear all this. So GBP USD, we can start from monthly, see what the monthly is actually doing for us. You can start from monthly. You can see that market is the setup is likely going to is kind of the same. The setup is kind of the same. So and we can work with that and see what the monthly is actually doing. You can see. So GDP USD, it's obvious. I've analyzed this trade multiple times. and we just brush through it. You can see when market did this is not break of structure. The market went back for more liquidity at this level in monthly, and market finally dropped. So, and we had break of structure here on GBP USD monthly time frame. So you can see we have break of structure here, and systematically, what is the first thing to do? Look for your last pullback before or after break of structure. You can see this is where we had our last pullback, and look for your POI. This is the first and only POI that we had, and you can see market responded a little bit, but kind of invalidated the zone. But for the fact that market is still trading around our zone, because this is only on POI, this is on order flow. So if you were to use order flow, you can see market is still at your zone, at our zone. So it was only grabbing liquidity. So this is just a simple ways to analyze the market, and this low will be the next level the market is likely going to target. So, and you can see when market gets to this higher time frame POI, see what the market was doing. The momentum was now slowing down. Market was unable to break above because all this high must be protected, and market is doing everything to protect it. So that's why you see that market has been stuck here for a very long time. So if you look at it, 1, 2, 3, 4, 5, 6, 7, 8, 9, almost a year. That's 9 months. So market has gotten to this level for almost 10 months now. So, and you see, just looking at it using the basic knowledge, you can see market has done monthly double top on this level inside your zone. So that's another extra confirmation that you can work with. Monthly double top is not a joke. So you just have to understand that. So now the market, we can see the market is trending in our monthly POI. All we need to do is to go to 24 hours. Go to 24 hours and see what the market is actually doing there. So, and I think it's very simple. We can see 24 hours. All we need to do is to just mark what the market was. Oh, these 2 hours. Sorry, 24H. So all we need to do is to just look at what the market is also doing. The monthly double top that we are seeing is this. You can see this is it that we were seeing there. So, but we don't. That's not our problem. I'm just trying to make extra reference to what the market is doing to the price action. So now, how are we going to know whether daily time frame is also going to be in sync with this higher time frame POI? All we need to do is to just mark our structure. So what's our first break? What is our first break when the market got to this level? Let's start from here. So just for clarity purpose, you can see this is a break. You can see this is a break of structure. Why is this break of structure? Because inducement was taken out. A market responded to fair value gap here. A market push up. So we had clean break of structure here. So, and what else? We have market push up, push up, push up, created another inducement here, and did what? And break this above. But on its way, there is no inducement. So this inducement will be shifted to this level, and this will be incomplete structure. So, and as you can see what the market did, market came back. This low will remain our low because it was the last low that the market created. And you see market traded into this low and reacted from this, and boom, market went up. So all this happening inside higher time frame POI. But first attempt, market refused to do what? To break above here, and we had change of character. So you can see based on what GDP USD daily time frame is telling us. So we are expecting this side to be protected, but market said they need more liquidity. Sorry, market said they need more liquidity, and it also did what? Break the the high of this market and gave us another change of character. So this high liquidity has been taken. This high liquidity has been taken. So, but remember everything happening here. That's what happened when market was sweeping our higher time frame POI. So in this case now, where is our high? Then where is our low? This is our high because it's the last high that the market created, and in terms of structure, this is our low. So it's not that deep. It's very very simple. So this is our low. So anything below here, we also confirm that we are having daily change of character. Remember, market is trading inside monthly time frame, monthly POI. So if we can confirm change of character by coming below this level, then the monthly and the daily is now syncing together. Then we can now start doing what? We can now start preparing for a sell, complete sell probably for a very long time. So, but as it is now, what is the market doing? First of all, this is our major low that the market created, which serves as our inducement. You can see on its way, we had something like this. You can see this is the major low, then before market boom push up. So this will serve as our inducement. Then we can use this level as our what? As our POI. So this is the only level that can categorically push this market to the upside. But you can see the momentum is kind of weak. First attempt, second attempt, and market is trying to push down again. And there is no other POI that can still hold this market. So I'm anticipating that this level will fail and market will come and sweep this low or close below here. So because remember, we are responding from higher time frame POI. So if this happen, as it is now, I had a trade running in this setup. Why? I will give you the breakdown why and how I execute the trade. You can see now that I know that we are likely, our market is giving us based on what we are seeing on monthly time frame, then I'm very kind of 80% kind of believe that market is going to flush below, is going to come below here. So, and as you can see, market has been stuck here for a very long time, for almost a week or plus. So now, then why? Because I was selling from this level, knowing the market is coming to this inducement and probably mitigate this level. So my target is this level. But based on what I'm seeing on higher time frame, I want the market to invalidate my setup before I can know that okay, this market actually wants to push up. But as long as the setup is still valid, then I don't have any problem. I have to continue selling. So that's exactly what we have in this place. And you can see how was I able to manage to enter this trade. All I do was to go to 4 hours and just trading down. I had a trade here before. I had a trade here which I had 1 to 3 R. I think I did it in my previous video. So, and I reposition again. So first of all, the last break of structure that the market did was this. You can see it's obvious that this was the last break of structure that we had. And marking my inducement, this serves as my inducement. Remember, this 4 hours inducement. And where is my POI? I only had one POI, which is this level based on 4 hours. And I'm seeing a kind of hidden POI here too. So you can see why is it hidden? Because we swept the two previous candle. So, but the system I used to execute is not the hidden POI. I use Fibonacci and Fibonacci 75% pullback. That was what I used. And I just take my Fibonacci from here to here and I execute my trade from this level. From this level, because I knew that this high must be protected and I'm targeting this level at least 1 to 3. So this is the trade I had, the only trade I had last week, and I'm hoping that I'm expecting the market to come and give me another break of structure on GU. So it's not as difficult. Now it's because I knew where the market is actually going to in higher time frame. That was why I can trade towards that direction. This counter trade based on higher time frame consideration, but you can see in 4 hours it's just a smooth trend towards to the downside. So you can see, so it's not that difficult. Just understand top down analysis from higher time frame, then it will be easy for you to flow in the direction of the market. So even if you're going to have some loss, it will be very very minimal because you are trading in the advantage side. So the next pair I want us to go to, let's check S&P 500, US 500. So let's go to S&P 500. You can also see it as US 500. So our analysis will start from weekly. So, and you can see this is one of the easiest pair to kind of trade if you're a newbie. This is one of the easiest pairs you can trade. Why? Because most of the time throughout the year, it's always trending. You can see always trending. See always trending. Add small pullback for some time. Then see always trending. See. So 80% of the year, this pair is always trending. So, and it's easy to trade a trading pair than to trade a pair that is kind of confusing. So that's why I can recommend this pair, S&P 500, to anybody that just start trading or that just wants a stress-free pair to work with. So let's dive into the analysis. You can see this is our weekly POI, and if weekly structure. If we're to if we were to mark this structure, it's very simple. Just mark it. This is the last obvious break of structure that the market did in weekly. Then it's obvious that this was our low. So, and you can see market was just busy pushing up, pushing up, pushing up, pushing up. No weekly structure taken out. So now that we are able to establish that, where is our last push up that the market did? You can see this was the last push up. You can see market push up, push down, push up, push down. So you can see this was the last push up that the market did. So it means that our weekly inducement will rest here. So once we have our weekly inducement marked out, what are we supposed to do next? Next to our POI. So you can start from the top, from the immediately under the PO inducement, or you start from extreme. You only need to figure out two POIs. And by knowing that, come to the extreme, you can see that we had one here, extreme POI. Then the other one, if you have to look for it, you can even mark all the POIs and take the first one and the last one. The rest is SMT. So you can see there is no other POIs again. I can't figure out any other POIs. Why do I pick this one? You can see fair value gap associated. Then you can see this one also has fair value gap. No other POI that has clear fair value gap like this. So that's how we are able to pick our valid order block or valid POIs. So you can see now that we are able to establish that, let's now see what daily is doing. You can see that daily 2 is trending towards this first or the second POI, and that's all we need to know. So systematically, let's mark what the daily is doing. Where is the last break of structure that the daily did? You can see maybe this one, and market came back again, took out this inducement. Let me remove this now that we know that it's a weekly inducement. You can see market came back, create a pullback like this, then small pullback, then push up, then come down. You can see this is going to be our daily what? Our daily inducement. So the process might be smooth, the process, the chart, the stuff, the chart might be clear. Sometimes it's not going to be clear. You just have to follow the process and make sure that you actually pick the right one. Not that you will be using your mind or your brain thinking we hold this, valid this. No, you just have to do exactly what your game plan asks you to do. And you can see market was unable to create complete structure here. So it swept this high, and that's a sign of weakness. So, and I said once the major high is being swept or major low is being swept, two things is likely to happen. You see that market need more liquidity or market need more minor and small market needs temporary liquidity, maybe a small liquidity by doing pullback and continue, or you want to change direction. So, and as you can see, instead of us to have this level as our low that the market will respect, but because we had a swept of this level, then our low will still remain this level, because that was the only place, that was the only level that we had last structure. So, and you will see, why do I choose this level? So if this level serve as our inducement, then it means that this level will serve as our POI, and this level will serve as our low, because our structure still remain like this. Our structure still remain like this. So this is the complete structure that we had. And since this one is incomplete, it means that market is likely going to push down, probably come to this hidden POI and or fail. And you can see none of the two happen. Market responded from this level, sweep this high, then start collapsing from there. And at the end of the day, we had change of character. So that change of character now align with what our weekly time frame is saying. So it means that S&P 500, we are supposed to be looking for sell at least temporarily to this level. Not that market will not give you buy setup, but the higher probability for this setup is sell. For this pair is sell. So I was able to I positioned for a trade here, but sorry, market refused to take me in. So I missed the trade narrowly by a few pips. So now if you see, so you can see once we see the weakness here, I can come down and scale down to 4 hours and try and start selling to this direction. So now that we have daily change of character like this, you can see this daily change of character. All these are internal structure, these are liquidity, so don't be confused by it. once you understand the concept, just follow the whole process. It's still the same thing. Everything works. So pick one and stick to it. Study it. Once you open your chart, what you digest most, what you want to see is what the chart will present to you. So it's not that maybe every other thing don't work. No, everything works. So now in this case, we are daily high here, which will serve as our inducement because this was the last value pullback that the market did. So if you are to pick POIs now, we need to start from here. You can see this first POI mitigated, no inducement, no fair value gap, no fair value gap, no fair value gap. So you can see there is none. Probably maybe hidden POI here. Market can come, sweep this high and drop. So those are the scenario. Maybe market will go up, sweeps this high, mitigate this hidden POI and start dropping again. Then the process continue until we go to this higher time frame POI. So that's how I perceive this. So and another thing that can happen is market continue pushing down without looking back. So which is also normal. You can see a small push up, then come down. A small push up, come down. A small push up, come down. And if market wants liquidity, then by that time we'll start marking our POIs. So just prepare for that. And if you go to 4 hour time frame, you can still see if you have your setup confirmed. And in 4 hours, you can see all this now is a 4 hour setup. So now that you know that market is selling, what I did was to position for a trade because all I did was to do what was to mark my last break of structure that the market did and mark my inducement here. Then I now position for here. I want the market to mitigate this level, cover this level, then I position for here. That was why I said I missed a trade on this. I only wanted 1 to 3. So you can see narrowly I missed this trade. So that's it for S&P 500. In terms of 4 hours time frame, you can see this is just a single candle. All this is just a single candle. All this. So we do not have inducement. So if market is still going to respect this 4 hours time frame, then market will need to use this high as an inducement liquidity, then respect whatever I wanted or the POI at the top, then we can now see that movement. So that's it for US 500, S&P 500. The story remains similar on US 32. So let me check USD JPY and see what the USD JPY is actually telling us. USD JPY. So sorry. So this USD JPY. Let's see what we are having. Let me clear this. So based on weekly time frame, we can start weekly, we can start monthly. But I think I've done an analysis on USD JPY monthly time frame. So and you can see it's kind of smooth. Market was bearish before, and then we are seeing systematically higher low now. But in terms of structure, what is market doing? So let's just mark the last structure that the market did here. You can see this was the last structure that we had, which is monthly. And why? Because market came back for this as an inducement. You can see this is a valid pullback. So and next, what does the market do again after break of structure? Market came back for this low by sweeping this that serve as an inducement again, and we are expecting the market to do what? To break above here. So that's just the simple thing on this on the monthly time frame. So and from monthly, there's no need to go to weekly. We can go to daily directly and see what the market is doing towards this direction. So and you can see this is very simple. Look at this. Now that you are able to understand this concept, you can see this will first be the monthly low that the market created before the last structure. You can see. So now that you know that inducements happen and markets, there is no POIs that markets can respond to. Market swept the inducement. All you need to do is to go to 4 hours time frame or your lower time frame and start trading towards this direction. And if you had for you to know that okay, this movement is going to stop, you had a failed 4 hour setup or lower time frame setup here, and you wait, and when market come back here, you see the market still stuck again. You can see because this is the higher time frame direction. This is the direction that the market is going. So now imagine you go to 4 hours and you start trading towards this direction. When is this? This is about since 2025 May. So you just have to trade towards that direction since 2025 May. All you need is to just be looking for buy. Market will give you sell setup, but you know it's low probability. So and there's no way you can be positioning for buy here and you will not see good setup. So that's the essence of top-down analysis, to project the long view of the market, what the market is likely to do in 6 months, 1 year. That's exactly, not that you'll be doing top-down analysis every day. It doesn't make any sense. So top-down is to project a long time thing for you. That's why you are using higher time frame, and that's all you need. So once you understand that, then you can know that for the next 2 months, this is the direction I want to be trading. So, and you can see in daily, the whole process remains the same. I don't want to start marking the structure, but you can see market break this structure, confirm. Market came back for inducement here. You can see market swept this low, grab liquidity here, then market push up, break this high again. The same process over and over. So even if you have set setup, you will see that set setup is going to be short-lived because it's going to be temporary. So you can see, look at this set setup. Look at this sell move. This is temporary. It's just a pullback for this major move. And market did what? And market continue its bullish momentum. So that's all you need. You don't need to be to just be doing analysis every day, every time. All you need is to know where the market is going, then you trade towards that level. So that's what GDP USD and USD JPY is doing. So if we were to mark it, we can say this is the major break of structure that daily time frame confirmed for us. And after that, after we had major break of structure, then this level will serve as our low, because this was the deepest level that the market come. Then you can see this is a valid pullback. So it means that we had a pullback here, which can serve as our inducement. And exactly what the market did, market just mitigates this decisional POI, and this will serve as an extreme POI. This is just the two POIs the market is likely, that has high probability, and see how nicely market reacted from this decisional POI. And market did what? And market continues bullish momentum. So when you trade in the direction of higher time frame, it's easy for market to go as you plan it than not going as you plan it. And remember, this is where we are coming to. At least we still have a gap of about 188 pips to get to our monthly break of structure. So in this case, now all you need to do is to just position. Maybe you go to your 4 hours now and mark your 4 hours low. So in terms of 4 hours, this will be our break of structure. Then this will serve as your low. In terms of 4 hours, this serve as your low. This is your trading range. So all you need to do is to look for your valid pullback, which is here. Then look for your what? Look for your POIs. I think this other block serve as POI, but it look mitigated, so we can't use it. So now we don't have POIs here. At the extreme too, it has been mitigated. No POIs here. So it's likely what market can do, or market is likely for market to do, is to sweep this and continue going up, or market creates another valid pullback, which we can use this as inducement. Then maybe this level will serve as our POI, the market will continue. So whichever way, and it still doesn't matter. Market can still come down and sweep this major low before it continues. But all you need to know is we are trading, all we the high probability setup is buy. So whichever thing you are doing, just position for buy. So that's it for USD JPY. And I hope you guys are learning one or two things from this analysis. Which other setup are we going to look at? Let's see what um, AUD USD is doing. Sorry. So let's see what AUD USD is doing. Why is it typing some kind of nonsense for me? Okay, let's see what AUD USD is doing. I think this is the chart I used to teach someone. So let's just use this. I see market, remove all the drawing. So let's see what AUD USD is doing on weekly time frame. So we just go to the time frame that is kind of smooth, that is kind of clear. We don't need to start stressing ourselves. And you can see on weekly time frame, this momentum has been long bearish. But we have to mark the structure for us to know whether the bearish has stopped, and we need to start positioning for buy. So, and in this case, where is our obvious break of structure based on how we mark? You can see this is the obvious break of structure that the market is. So if this is the obvious break of structure, look at this leg. You can see this is the deepest pullback that this leg did, and that leg we serve as our what? As our high. So this is going to be our high, this is going to be our break of structure, and this is going to be our new low. So That's very simple. Then not that simple, but we just have to understand how it works. You can see why is this a structure complete? It's because we had what? Inducement here. And market did what? Market swept this side and start calling down. So what make a structure complete is just an inducement, nothing else. All these are internal structure, all these drama, all these are internal structure. And this is where a lot of people will lose money. So at the end of the day, know that market is coming here, but see all the drama that it did. It's doing as if you want to go up, you want to come down, and all those things. But at the end of the day, it's only building liquidity to come and take out this low. And after that, what are we supposed to look out for? Look out for your inducement, which is the last pullback that the market did, which is here. So if you have to look at it, this is the last major pullback that the market did. So, and after that, what are you supposed to look out for? Look out for your POIs. So the first POI, we can start from the top. This look like an hidden POI for me. And the second POI is the one that rests above here. So which is this? You can use this. So this is the POIs. Why? Because this one has imbalance. And this hidden POI doesn't need imbalance. So you can see this is it. And at the end of the day, market do not respond to this level. Market try to respond, but what I see that the market is doing here is that market is only here to grab major liquidity. This is external liquidity. And once market do this, as I said, two things is likely going to happen. You see that we have temporary pullback, which is like this, the market continue, or we had a permanent pullback like this, and market breaks structure. And based on the analysis, you can see that we are expecting market to come and break this structure. So all the liquidity have been grabbed and external liquidity has been grabbed. And looking at this setup here, you can see that the rejection, the same momentum came in immediately market got to this level. See all the weeks, for a complete 1 week. You can see what the market was doing. 1, 2, 3, 4, 5, 6, 7. Almost 2 months. You can see what the market was doing here. Market stuck to this level, and you can see last we have that same momentum that comes into the market. So this is a sign for us that this level is a very strategic level for us, so we can start looking for sell towards to this weekly break of structure. So but for us to do that, we just need to go to daily time frame and see what the daily time frame is doing. Okay, the analysis start from weekly, then we have to go to 4 hours time frame and see what the 4 hours is doing. So that's where we can understand what this. So when you are using weekly POIs, you use 4 hours for confirmation. Then when you are using monthly POIs, you use daily for first confirmation. Then you can have scale down for your entry confirmation. So all we need to do is to just mark. You can see when the market mitigate this level, first attempt market mitigated this level. You can see break of structure happens, and what happens after this, we have to mark our inducement like this and mark our POIs. This extreme POIs. So, and you can see market mitigates this narrowly and push up. So it means that market still need more liquidity. That push up was the one that went to go and grab major external liquidity, and you can see market push up again. So it means that this is our low. This low that the market created will be our low. Anything below here mean 4 hours change of character, and you can see what the market is doing. So before market got to this level, what are we supposed to do? We are still supposed to mark our structure. This is our inducement because it's the last pullback that the market did, and this is our POI. But for you, anybody that is experienced and see what the higher time frame is doing, nobody will take a chance to buy again from this point, because you are buying against the higher time frame flows, considering that the higher time frame is bearish and market has grabbed the major liquidity. So there's no point in buying. You just need to mark this stuff in order for you, this 4 hour setup, in order for you to know exactly when the market changed character. And as you can see, market had a change of character here. First attempt we had a sweep, and the second attempt market closed below here. So that's what confirmed this change of character for us. So, and now we had 4 hours change of character responding to what weekly is doing. So it means that these are 4 hours high, these are 4 hours break of structure. So until market, we can't figure out 4 hours low now until market did what? Until market take out inducement. And where is our current inducement? This is the last pullback that the market did after change of character. So this will serve as our POI and as our 4 hours inducement. And let's see what we have. This will serve as our POI, 4 hours POI, which is decisional. And let's see if we have anything extreme. I'm not seeing any POI extreme. Maybe this, if it's still not mitigated. Let's check closely if this is not mitigated, but it looks like it has been. This is weak, so I think it's not. Let me check. What's the figure? Let's check. This candle, the low is 233. Then let's see the high of this candle, 234. Then it has been mitigated. So this is not a POI for us. So we need to wait patiently for market to create. This is the only POI that is valid that we had. So we need to wait for market to create a complete structure for us, or probably maybe market drop and mitigate this level and push down. Then we can now look for inducements. Know that this high will be protected. Maybe we'll have POI there, and if market come back here, we can now sell. So that's exactly what we are going to do, because there is no place. The other way you can trade is if market did a deeper pullback and you use 75, you target from this high to the low that the market created, you drag it like this, then you come and position just for 75% pullback. So that's the other way you can. Because why are you doing that? Because you know that this high will definitely be protected if this momentum wants to keep selling. So that's it for AUD, USD. That's what I will be positioning for. You see that 75% pullback, or market responded to decisional POI, or market creates another complete structure for me. And I know that I can systematically trade towards this direction. Look at it. You don't need to look at it. So if you're trading to here, you can see how many pips. That's almost 1,000 pips. So that's good if you know where the market is going for the next 1,000 pips and you trade towards that. If you catch few trade in this place, then you are good to go. So that's it for AUD USD. I hope this video is not getting too long. So which other pair are we looking at? Let's see GBP JPY. Let's see what GBP JPY is doing. So GBP JPY, let's see what it's doing. GBP JPY. Okay, I've done analysis on this. Let me check IC market. Let me check another broker. Okay, GBP JPY. Let's see what it's doing. So let's see, first of all, let's look at weekly higher time frame POI. Let me remove it. So you can see this pair, this will be the last pair. I don't want this video to be too long. You can see this pair has been trending for a very long time. You can see it's like the same thing with USD JPY. You can see. So this, all we need to do is to go to weekly and mark the obvious break of structure that we can see. It's very simple. This is the obvious break of structure that the market created. So weekly time frame, obvious break of structure. So now it means that this is our low. Not just that you go to a level, you look for obvious break of structure and confirm that the structure is valid. Because if you look at this, these serve as our inducement, and as I explained, what makes the structure valid is inducement. Inducement, also known as liquidity. So you just have to know how to figure that out. I have a video that explains how you can identify them, your valid POIs, inducement, and complete structure. Complete structure mapping, I have it on my channel. You can just take a look at it if you find this video interesting. So all you need to do is you can confirm your break of structure weekly, confirm your low, then all you need to do is now look for your weekly inducement. And how can you get your weekly inducement? You look at this level. Where is the last valid pullback that the market did? You can see that this was the last pullback that the market did. Why? You can see this was the pullback that the market did. This was the last pullback. So that's what makes it valid. So this is an inducement that the market did. So now weekly POIs, first of all, look at the POI that is next to this your inducement, and that POIs must have fair value gap. So let's look at it. You can see this is the valid POIs. You can see this is the POI that the market did. So this is it, and we're expecting this to be weekly decisional POI. And let's see if we have extreme. You can see there's no extreme POI. So the only thing I'm seeing is probably hidden POI. So but we don't need to reckon with that until market invalidate this level. So this is the only POI that we had in weekly. So we're expecting market to come down here, or market break up and create another inducement for us. So now that you know that market is giving you 60 to 60-40 bearish. So because we don't know, market can still want to create another inducement at the top by going up. So but as it is now, we're expecting market to come down or to go up. So let's go to daily time frame or 4 hours time frame to confirm what the market is actually doing in 4 hours. So knowing what the market is doing in 4 hours is very simple. Just look at how the market has been trending and mark the obvious structure that the market did created for us. You can see this was the obvious high that the market swept. So it means that when we had this major high swept, there is tendency that we need a value and we need a deeper pullback, or market need more liquidity. But before we get to this level, to confirm our last structure, let's see what the market did. So you can see this seems to be our last break of structure. Why? Because 4 hours liquidity was grabbed, and you can see we have break of structure here. So it means that this is our complete 4-hour structure. And you can see market came back, look for liquidity and protect this low and push up. But this next push up that the market did, you can see that we swept this high. So it means that this high is still intact and this low is still intact. But at the end of the day, knowing that this is the last complete structure that the market did, anything below here will give us change of character. And immediately we had change of character here. Immediately we have change of character here. What do we need to do? We need to look for inducement. But if you look at this leg, you will see that there is no inducement there. So it means that liquidity is kind of resting above here. So that's why you see how market swept this high and market start dropping. So after market dropped, we can now confirm 4 hours break of structure again. So now it means that market is giving us 4 hours break of structure to the downside and is corresponding with what we are anticipating on weekly time frame. So now we have to mark our 4-hour structure. We had break of structure here. Then where is our inducement? You can see this is the last pullback that the market did, that created, that we can use as an inducement. And where is our POIs? You can see this is the last order flow. So if you are refining it to other block, then this is going to be the other block. Why is this other block valid? Because we have fair value gap in between. So you can see the fair value gap here. And where is our extreme order block? This is our extreme order block. So, and this is just the two POIs that you have to trade with by selling. You can see market is struggling at the decisional POI, and if this fails, then market is likely going to come here. But based on what the market has done here by grabbing liquidity, I'm very optimistic that market is likely going to drop. And you can see market has built a sell side liquidity here. So this level is likely going to attract the market to the downside. So in terms of 4 hours, so if you're trading this pair, you can easily go to your time frame, lower time frame, and position for sell according to what I'm seeing here. But you just have to apply proper risk management, and this level will be the next break of structure for 4 hours. Remember, this is where we are targeting. So if you had a setup here, it will be a good idea. So this is what GDP JPY is doing. All these are internal structure. 4 hours internal structure to these POIs. These are internal structure. You just have to identify that. So even if you are trading this internal structure, you have to be aware that this is not going to be a long-term direction. This is just going to be a temporary direction. So until all this has been invalidated, then you can now say you have change of character. Then maybe market will come down. Then you now start buying to the upside. But before that, this is exactly what the market is telling us, and our job is to follow what the market is doing, not just to think what we feel. So it's not about what we feel, it's about what the market is doing. So, but for me, I will position here. By Monday, if I have an opportunity to join this trade, I will just position here, then target here. This is what I will do. Now that I only take 1 to 3, I can shift my stop loss up to accommodate just 1 to 3, because I know this low is likely supposed to be, market is supposed to come and take out this low. So because I'm trading in the direction of higher time frame. So that's it for this video. I hope you have 1 or 2 things to learn. If you have any question, you can drop it. And if there's anything you still want me to re-explain again, you can still drop it in the comment section. I will be glad to respond to your message. So bye for now. See you in another video.